All right, traders, it is Wednesday, September 4th, 2024. I want to do a video kind of midday. Didn't do one at the end of the day yesterday. Had a bunch of things going on, and I've got some stuff this evening as well. But I wanted to get a video out. I did post one of our member videos live for everyone to watch. So if you want to check that out, you can go ahead and check that down in the YouTube channel today. Give you a little insight of a little bit member meeting today where I did a zero DTE trade. We reviewed a ton of charts and for trade potentials. We looked at one of the hedges that I'm putting on. We actually got out of the zero DTE live in that session. And then we went through a lot of the different positions that we have on. So all good for me for what I'm trading. And we've had 2 great days of trading so far in September, which is supposed to be that bad month. So I want to talk about a couple things today with you. So we're going to talk about where I see the market, what I'm doing, and then let's get a trade put on today. So I'll keep this fairly short for you, but really, September, as we know, is historically the worst month in the markets for stock performance, right? At least that's what everybody keeps saying. Let's take a look. Is that actually the case? And what are we looking at? Well, if we take a look at the seasonality chart here, and this is over the last 20 years, you get a sense of where some of these dips typically occur. So in June, typically a down month as well. So June, we're typically down about 0.2%. August, we're typically down about 0.1%. And in September, we're down about 0.7%. I mean, that's the average for September is down. So it is the month where average-wise, we're down the most if we're going to be down in a year. So bears repeating that, well, let's take a look at seasonality, and do we change our trading style at all, or do we just look for things to take advantage of? And again, I'm probably more in the latter category. I want to look for potential opportunities where I can potentially be more right and get more trades on and make more money, as opposed to, oh no, we're going to be down 0.7% this month. I got to go run and hide and don't do anything. Well, let's see if we can take advantage of it. So I think it just bears a little bit of a cautionary tale here, but let's look at it. And also, if you look at the gain frequency, it's 55%, which means 55% of the time, it's still gaining. So more than half the time, September's up. It's just when it's down, it's down. But more than half the time, when it's up, and it can at times have one of the best returns of any month out there. So again, don't get freaked out with all the talk about seasonality, because yes, the markets can be down. It's not the worst month of the year at all by a long shot. For return wise, it's actually one of the better months of the year return wise. It just happens to be down on occasion. All right, so something to at least take a look at and understand there that, yeah, can it be down? It can be. Yeah. And historically, it has been. And the average decline, I think, is down, since 1928. I think it's down 1.2%. In the last 20 years, it's down average of about 0.7%. So not huge in that time. And why does it happen? So why do these drops happen? Well, number one, there's those increased trading volume. Traders are typically back from summer break at this point. Okay, they're on vacations. They're back from the Hamptons, as you hear lots of those things happening. But it's typically the second highest trading month of the year when it comes to volume. So September is going to be a heavy volume month. Okay, more trading typically is going to lead to a higher volatility, and often higher volatility can lead to lower returns. So going to be a lot of volatility because everyone's back, everyone's trading. Okay, and if you're looking at volatility and trade volume, you're certainly going to start to see that starting to occur in many areas. And summer months are just usually lighter. A lot of people on vacation, trade desks on vacation, maybe not as much going on. But September really hits the ground running. Now, people are now back from vacation. They're reassessing their portfolios, and they're potentially taking some profits from gains. Now, you do have, end of the quarter at the end of the month as well. So It really all depends. Are people going to reposition themselves? Are they going to get rid of dogs? Are they going to add new stocks in there? They might start thinking a little bit about taxes here. If you're a if you're extending your tax returns, well, those are individuals that are going to be due in October. And if you're a corporation or a partnership, something like that, that extended, you may be in September. Now, you might need to raise funds to pay some taxes, so you might have to take some profits from some of your gains here. So it's certainly a reason for people to sell would again be reassessing their portfolio, taking a look at what they own, and maybe getting out of some things or taking some profits here. Now, if you listen to to Tom Lee, he's kind of a perma bull for the most part. He has talked recently about some caution in the market, but then seeing a bounce. If we see a 7 to 10%, which he talks about a 7 to 10% market decline, well, now we're talking about a $500, $600, $400, $500 decline, something like that in the markets. It's really going to be data driven. Tom says that's potentially something that can happen in the month of September. I think it's usually the back half of September is a little worse than the front half, but we'll see what happens with that. But I think it's just really being cautious over the next month or two through October. Does that mean don't trade? Does that mean scale back? I don't think that means that you should be out of the market. And I don't think that means, start selling everything now and go hide in a bunker. I think it's being cautious. Okay? Maybe we want to make sure that, we don't have extra trades on that we don't love. Maybe not putting that extra trade on if it's not a great setup trade, or maybe if it's not in ES. And we're going to put on a trade here. Hopefully, we'll get a trade on during this short session with you guys today. But I think if the markets happen to pull back 5, 6, 7, 8, 9, 10%, that 7 to 10, as Tom Lee said, could potentially happen. I think if you get that, you're going to have fantastic buying opportunities. I mean, if you wanted in on Nvidia before or Netflix, I think this is going to be your opportunity if they continue to sell off. Now, Nvidia is up a bit today. We'll take a look at some of these charts, but I think those are things to watch. The other things to watch will be some of these economic reports. We've now flip-flopped from good news is bad news and bad news is good news, because we were hoping the bad news would force the Fed to lower rates, okay, and to ease up on this. And now the Fed said, yeah, we're going to start cutting rates in September, and who knows what they're going to cut throughout the rest of the year. Okay. Now bad news is actually bad news. We already know it's already out of the bag. Fed's going to be cutting. How much they cut now? Bad news being bad news. So if the jobs reports are too strong, that could be, considered good news. If they're too weak, that could be considered bad news, because now we have recessionary fears coming in. I think just watching the markets, if we're going to sell off decently, it's going to be a great opportunity. I think it's not so much the inflation worry now, it's growth. Are we slowing? Is growth slowing? Okay. Is unemployment getting out of control a bit? We'll see what happens. We're going to get some numbers tomorrow as well. But I think it's really going to be watching what's happening here, and hopefully, placing those trades that'll give you the best opportunity, I think, to be successful. All right, let's take a look at the market, and I'll show you what I'm talking about a little bit here. As far as opportunities, I'll get off your screen so you can see the whole thing. All right, so when we take a look at the SPX, solid bull run up here. Yes, getting a little topping, maybe a double top, maybe rolling over here on the S&P. Big down day yesterday, and now today we have this inverted hammer forming. So we had a hanging man for the most part right here, and now an inverted hammer 2 days later, and a big bearish, engulfing candle here yesterday. Tried to bounce a little bit today, couldn't do it early on. We're just kind of sitting here just down a fraction on the session. So we're down a little bit on the day today. I think a little follow through here is not a bad thing. So excuse my voice. I think follow through to the downside. It's not a bad thing. I think just again be cautious. I don't want to be slapping on a bunch of bullish trades in here. I think that doesn't make any sense at this point in time. I think now caution is advised. As soon as we get some sort of a pullback and a resolution in here. Now again, today you're looking at an inverted hammer, and which could potentially be a bullish reversal. So we'll see. Did we sell everything we wanted to hard yesterday? And a lot of this yesterday as well. I think people kind of just freaked out for no because they didn't know what the heck was going on. But yesterday was a VIX dealer short gamma hedging event. It really was, and I think a lot of that has been unwound, and VIX dealers just the hedging event happened yesterday. They hedged it. They made the move. Okay, they bought on Friday. Okay, and they sold out of their VIX call spreads yesterday on this, and pretty good, pretty good move overall. Nice VIX move yesterday, and this is what the event was. So they bought on Friday here and sold yesterday. So big VIX selling event yesterday, pumped that VIX up, getting not much follow through today. VIX is pretty much flat today. So I think that's again something that's important to remember and keep in the back of your mind, that there was a lot of VIX calls bought Friday and market drove the market up. Okay, they were covered yesterday, big gains, nice stuff. So overall, VIX still a bit elevated. We're sitting at 20, 21. Okay, that's nice for us as premium sellers. We want to see that volatility, but we are going to get that volatility. VVIX as well, elevated decently back to levels that it was at on the 2nd of August. We're right in that range again. So we have some elevated volatility, but we don't have the same, Japanese catalyst that we had back then, where we were really overdone and we sold off on that carry trade issue. I think if you look at the Aussie dollar to the Japanese yen, yeah, a couple of days sell off, but we really weren't overextended as we were previously. So I'm not really worried that that's a catalyst on something. Trade opportunity. I think S-vol here is something to take a look at. So I think S-vol, we've talked about this on and off. It plays a really good dividend. So I think it's an opportunity to trade this particular underlying. Now, not from an option standpoint. I don't want to play options on this, but if volatility is rising, okay, S-vol is going to be falling, but this thing pays a heck of a nice little distribution. So I think that's really what it is that this is a vol play, or I'm sorry, a dividend play. And the dividend yield on S-vol is 16%. Okay, not too shabby. So if this is going to pay 16% dividend yield, okay, distribution, they call it dividend, or I'm calling it dividend, but distribution, and you can buy it for a little bit cheaper, where every time it has sold off because VIX has spiked, okay, it's rebounded right back up. So I think you're getting an opportunity to get in here and let this go. So distribution was recently. So I think I think you have to get in at any time that you think is the right time. August 27th was the last ex-dividend date, so we've got a couple weeks to go, and it was 0.3 per share, which was nice. So 0.3 per share is not a bad dividend yield. Like I said, 16% for the year. So I like S-vol here. I think this is something you get into as an income play, not a trade. So I think this makes sense. We may add some of this to some of the portfolios that we have running. I'll get into that a little bit more. All right, so real quick, ES, is it rolling over? Well, it's a lower high right now, and things are bearish on the daily and even on the weekly. Even though it's a longer bullish, I think you're still bullish here for the most part. But we're breaking out of this range to the downside. Where this stops, we don't know. But I'm very cautious here, and I'm not going to add a whole lot of long stock or ES type of plays. So what can we add in here? Well, I think that S-vol trade was an interesting trade. Generate some income while we wait. If we look at oil here, oil's been really taking it on the chin. And I looked at this earlier with members. I mean, you're going back to 2021, somewhere in here where we kept hitting support around 63, the 67, 65 range. Oil's heading that way. Is it demand by China is weak? Is it production cuts by OPEC aren't coming? So we're going to keep producing, keep supplying while demand is falling. If the US is heading towards a recession or Europe is heading into a recession, it's going to reduce demand, which is going to, drop the price of oil. So oil continuing to fall. It's down decently recently. So I think we don't want to catch it here, but I like this candle. I like where we are in this. I will be looking for any signs of bottoming, and we're certainly getting very close to oversold RSI levels. I think oil is getting to a spot where I think getting long or putting some 112 style trades on is a great idea. All right, bonds. So I love bonds. I really like bonds. If the Fed's going to cut rates, bonds should at least hold to increase in value. Now, the Fed's cutting the shorter, the front of the yield curve. Okay, we're trading the back of the yield curve. We're trading the 20 or the 30-year. The 20-year here is much more susceptible. So I'm sorry, this is the 10-year. So we got the 10-year note. TLT is the 20. Okay, and then ZB is going to give you the 30. I mean, any of these three, I think, are good plays out there, depending on what you want to do. I like what the 10-year is doing. It's continuing to move up, consolidated, now breaking out to the upside again. I think this is a great trade. We are in this pretty well. We've already got 3 trades going here. They're all very profitable. A couple of them are starting to come off, so we might need to reload. I think put credit spreads, defined risk, or just naked puts look great in here. ZB, we're not in. We are in ZN, so we're in the 10-year note. But the 30-year bond, this is not such a bad opportunity either. Like, you just keep banging on this level here without really selling off much, just in this trading range. Okay, we can draw it out a bit. So, yeah, we're in this trading range here. It's going to pop one way or the other. My guess is it's going to pop to the upside. If rates are going to come down, then you should expect that this is going to move up. All the technicals say we should move up. I like ZB. I think getting in some ZB trades here, not the worst thing either. So I think we could add to more bonds. Gold, getting a little toppy, maybe starting to break down from this area. I don't think it's crashing anytime soon. I like gold. We're in a nice gold trade right now. We actually took some profits today in gold. Don't really see a great setup in gold right now, so I'm going to ignore that. And then the Aussie dollar, I like the setup here. I think this is a pretty interesting candle here. As the dollar's falling, these have been very strong, but I think the dollar is getting to a bottoming spot. I think this sets up as a nice triangle. We already have a triangle in here, but I think potentially we could add another one. The euro, not the best setup for a triangle yet, but I think a 112 is not bad. RTY, we're already in this thing. These little orange marks here are our put credit spreads. Okay, we're in good shape here. I love the fact that we're holding the 50. If the NASDAQ keeps selling, I think you're still going to see rotation into small caps. All right, copper, been taking a pretty good hit the last couple sessions. But other than that, it's putting in a nice move here, and we're already in copper, so I don't need a new copper trade. Yep. All right. And then I'm going to skip a handful of these, and I really want to talk about soybeans or corn. Okay. All very similar. I like this rounded bottom here that we're putting in soybeans. I think it's overdone, overextended. It's coming back in. It was oversold and bouncing. We've missed some of the move, but I still think it's not too late to trade in soybeans. So I think this is where there's some opportunity as well. And then again, I'm just not enamored of the big name techs. Apple, this does not look fantastic. You know, could be a hammer forming today, but overall, it looks like the S&P rolling over a tad at the top. Microsoft, definitely, I think Microsoft's looking more like a head and shoulders pattern here. I will put the neckline right in here with this lighter line. I think we're heading right on it. So I think we're heading right for this particular neckline. Okay. A break of this, which we bounced off today, a break of this line. I mean, it doesn't have to be exactly perfect, but I think that's the neckline of a head and shoulders on Microsoft. I think this thing could be in for some trouble. I think Amazon is not looking too bueno here either. Okay, look at this downtrend line. You're flirting with the longer term uptrend. I love Amazon. I think not here. I think we just wait and bide our time. We're going to get better opportunities soon. Meta, it's hanging in there pretty decently. Good bounce today. It's the best of the best right now. It looks fine. Can it continue to move higher? I think Meta can. It's the best of the better name stocks. Google looking pretty ugly here. I don't know. This could even be a little bit of a goofy looking head and shoulders neckline right around here. We break this. I think Google could be in for a little bit more trouble. Nvidia is already down to 108. It's bouncing a bit today. This uptrend line is in a bit of jeopardy. Okay. It's not the most solid uptrend line that we've seen, but potentially another goofy-ish head and shoulders with a neckline along this route. In fact, if we maybe bring it up here a little bit more, this is actually a little bit truer neckline, if you would. If we break 100, this thing could be a good opportunity. Is there some significant downside to it? There might be some more, but I think if you can get in under 100, this is not the worst thing in the world. It's got some momentum to the downside. I wouldn't touch it. I think anyone jumping in right now is getting a little premature. Tesla looking like it wants to rock. So Tesla, this might have been the opportunity at 200 here. We'll see. It looks pretty good. And then Netflix, I'll say Netflix and Meta are the two best looking of this group. This thing could be bouncing up to 21 and moving its way higher. Anyway, there's a handful of things there. Costco also looks pretty decent. And then CRM, just kind of looks mediocre to me. I don't like the fact that we broke into 21 and the 50 here. So I'm staying out of some of these stocks for now. I think if I was looking at anything, Hood, Robinhood, not too bad. It could be a bit of a head and shoulders play though too. We'll have to keep an eye on that. Okay. Silver here. So you've got the silver trust from iShares. This thing's interesting. Not ready. SoundHound. I do like it here. We do own it in the Lazy Trader portfolio. And in retail, still just sideways consolidating. All right, so we identified a bunch of trades. I don't want to go too long. Let's get in and trade something live. with you. So let's take a look here. Already today, we had a zero DTE SPX trade. Took 29 minutes to get our 50%. We added a new butterfly hedge today, and then we also closed out of gold naked puts that were part of a 111 trade. So we just have the put debit spreads left on in gold. Aussie dollar. So this is a trade that's up right now, 12%. I do like the Aussie dollar. I think this would be another potential strangle opportunity here. Oil, we've got some losses here. We're going to stay away from this right now. We've got our fly hedge already working here, and we just put another one on today. These are our volatility hedges. We will be closing these center strikes. We'll be buying these back at a certain price. We'll be adding more longs and then paying for them with some newer longs. But instead of having 5 longs, or 10 longs total and 10 shorts, as soon as we make a modification here, we'll end up with 20 longs, 10 shorts, then hopefully 30 longs, 10 shorts will happen. So that'll start giving us a lot more volatility hedging. And then we just started another version today. So those are good. And then I'm sitting here on a 14 DTE hedge that we put on yesterday. And then it's not really a long put hedge. It's just a trade that I put on, basing it on the fact that, things look a little weak right now. So I just put on a short-term trade. It's not really a hedge. It's just a long put trade. Okay. I don't know if I want to call it that, but because I really don't want people thinking it's a hedge. Okay. It's just a long put. That's all. Okay. It's down a bit, but that's fine. If it's down, and then we're up nicely. So where can we get some trades on? Well, we're in ZN. This thing should come off any second now. It's right at our profit target. We just haven't been filled. We've got this one on. It's only 9 days old, so I don't want to duplicate ZN, but ZB, which again, very similar. I don't want to be too over-correlated in bonds, but I think we could take a look at something in bonds. Here, I like the longer DTE right now. I think at least 79 DTE on bonds. Coming down here, we could do naked puts, but I think on ZB, okay, sitting at 125 and trying to break out, and it keeps going down about 122 and holding. I think the 116 is not bad. Question is, where do you want to, how wide do you want to go? I like the 3 wide, personally in ZB. I can generate 250 on 474. So let's move this thing up to a little bit larger size for us, where if we take a 2x loss, in fact, we're sitting at, I would like to get up a little higher. So a 2x loss here at 1750 would be 1% of the account. So I think we could certainly risk 1% on bonds here. Let's take a look at getting this trade on. Okay, and we'll put that trade. We'll see if we can get filled. We might have to adjust it, but I like where bonds are. I think we can be long on bonds. And I also think that SVOL, we can take a look at this thing. I don't know if this is really going to be the best trade for us. Again, you can't really do the options. There's just not much here on the options. I don't think they'd pay enough for what you want to do. So I think if you were doing anything on SVOL, you'd be buying it. Here, you're getting 30 cents on these trades. So I think we could put a little bit of a, let's go 500 shares. Okay. This will generate about 150 bucks a month for us in cash, using about, $8,000, which is not quite 2% a month. So about 1.8% a month, not bad. Generate some additional cash flow. Do these, I think, anywhere here or in the IRAs. I'm going to put one on here just to give you some sense. You know what? Let's just do $10,000 worth. We'll do 600 shares, and we'll keep this right about 10 grand. I'll probably have to fuss that thing too. But I like SVOL, and I think it just gives us a little bit of a income cushion here on top of TLT, which is also giving us some income cushion. Can you write covered calls on this? You can. So I think you could potentially write covered calls. Typically, this thing does not get over 22 and change, but as we saw, the options on this thing are really pretty ugly. So there's not much you can do. If I tried to sell these, I don't even know if I could get filled on something in here. You know, yeah, maybe. I mean, make an extra couple $100 on it. I don't know if we would get filled. I really don't. But potentially we could write some covered calls against it. But we're going to look at SVOL here as well. So two trades to add, ZB, SVOL, and then I talked about soybeans. I've been talking about it. The more I talk, the more I seem to be missing out on this particular trade. I think it's a shorter term opportunity trade. We're going to go 51, and we're going to go again right around that 12 mark. Let's see what we can make. Let's go 20 wide. It's a pretty good deal at 940. 940 on soybeans, and again, the low was 950, and that was back in the middle of August. Can we revisit it? Certainly we can, so we'll stick a little below that. I'll go to 10 delta, 75 on 278. I mean, still getting 25% on that. So let's crank this thing up a bit. Do a similarly sized trade on this. And if we took a 2x loss, we'd lose about 3,500, which would be about 1%. So we'll risk 1% of our account on this trade. And let's see if we can get in. It just ticked up a little bit there too. So we'll see. We might have to fuss these trades, but there you go. There's 3 trades for you. A little bit of market outlook. I hope this was helpful. Last thing I'll share with you guys is let's just take a look at the account. Right now, yesterday, we booked $2,183 in the account yesterday, and we've already booked $2,200 today. So September, we've already cranked out $4,400 in the first 2 trading days. Pretty happy with that. What did we do today? Well, we closed that gold naked put of the 111. We closed a 0 DTE trade. We also closed some naked puts here on an old 112. So we finished off the remaining 3 naked puts here. So we're doing great. I love where we are. We're getting this cranked up. We're just gonna keep generating cash. And we took that nice hit. We're gonna keep generating cash. We've got our hedges on. Okay, you saw the hedges. I've got a delta hedge. We've got a vol hedge. I think we're in good shape. So overall, I like where we are. I think this is set up perfectly. I'm going to keep sharing all kinds of trade ideas with you. Follow my journey, see how I'm doing, see what I'm trading. I just gave you 3 trade ideas. We're going to keep putting those on, and we're going to keep generating income daily, weekly, monthly. Okay, so we can achieve our goals. We got a little bit of a hole to dig out of. We'll absolutely get there, no doubt in my mind. Might take a couple months, but we'll get it back. So all good. If you're hanging out here and you like this video, please click that like button down below. If you're not a subscriber, check it out. And if you want to check out what we're doing in the Discord, where I'm sharing all my trades, Igor's sharing a ton of great ideas as well. We're here to help you learn, get better as a trader. Don't chase the shiny object and try to figure out the new way to trade. Okay? We're going to give you the tried and true strategies that we know work over time. Okay? And we're also going to give you those hedges and some of those other things that'll help you stay a little safer as well. All right, stay tuned for videos tomorrow, and have a great rest of your day. See you later. Bye-bye.